Okay, good afternoon. Welcome to the presentation today, Life Happens, Mortgages in a Changing World. My name is Mary Groth. I'm Director of Member Engagement and Donor Engagement at the Cleveland Metropolitan Bar Association. And I'm very pleased today to introduce you to our friends from CrossCountry Mortgage who are going to be presenting. Sheena Schiffer is the originating branch manager from CrossCountry Mortgage, and Dana Plusker is Vice President of Corporate Relations and Business Development at CrossCountry Mortgage. CrossCountry is a nationwide lender founded here in Cleveland and based in Brecksville currently, but will be moving to the downtown area next year. We're excited about that. Our goal today is to provide you with current information about mortgages in today's real estate environment. If you have questions, please use the chat feature. We also want to recognize CrossCountry as a friend of the Bar Association, a gold affiliate partner, and a member benefit provider with extraordinary value for our members and their families. We'll talk about that a little bit more, but we do thank them for this educational program and for being such extraordinary partners. At this point, I'm going to turn it over to Sheena and Dana.
Thank you, Mary. As Mary said, today's topic is life happens and the role of mortgages in a changing world. My name's Dana Plusker, and I'm excited to be on this call with my colleague Sheena. We're thrilled to be a partner of CMBA. As a Cleveland-based, Brecksville-based company, we're proud to give back to the community and to partner with other local organizations like the Cleveland Metropolitan Bar Association. As Mary also said, we are headquartered in Brecksville. We were founded in 2003. We have grown, exponentially since then. We have about 6,500 employees across the country, or nationwide, and 2,900 employees, new employees since 2020. We have over 500 branches nationwide and 227 new branches in 2020. We are a national lender, so we're licensed in all 50 states, which means we can help you and your families no matter where they reside. And we do have an A+ rating with the Better Business Bureau. My colleague Sheena is your dedicated contact for anything related to mortgages. She can advise you, provide you with options, and I'm going to hand it over to Sheena.
Perfect. So hi, everyone. My name is Sheena Schiffer, and I am excited to be on the call today. So I've been with our company since 2004. I started originating loans in 2007, and I started my own small team and became a branch manager in 2017. So I'm excited to be part of this growing company. We are a partner with the CMBA, and what this basically entails for you and your clients is this is going to be a lot of mortgage savings for you guys. So, typically anytime someone purchases or does a refinance or any sort of financing, there's always what's called origination charges. So the mortgage savings plan that we offer for you guys will waive those charges. So origination charges typically include processing fees, underwriting fees, appraisal fees, credit report fees, flood cert fees. So all of these charges are waived. So this is very significant. This amount of savings is a true no-cost loan for you guys. So it's really going to help with those benefits. So not only does this mortgage benefit you, this also benefits you and your clients. So I always tell people that as a company, we pretty much specialize in any residential mortgage. We don't do anything with commercial financing, but anything related to a residential loan, we offer financing for. So we can do financing for self-employed borrowers, conventional loans, jumbo loans, FHA loans, veterans, rural loans. We have down payment assistance options. So just keep in mind that our benefits that we are offering to you is also extended to your clients and friends and family. As far as interest rates go today, we are at historic lows. So this past January has been the lowest that I personally have seen since I've been in the industry. So any of you guys that currently own a home right now, if you have not refinanced your mortgage, now is definitely the time to do so. I would strongly encourage everyone to look at their mortgage statement, because with the dips in how low these rates are, this is going to be substantial savings for you guys. So I would encourage you to take a peek at that. Rates today, I mean, every borrower is going to be different, but an example of how low these rates are, 15-year interest rates are right now as low as 2 to 2.1%, and 30-year rates are in the mid twos. So every scenario is different, but it's definitely worth exploring options for anyone that currently owns a home, or obviously is going to be looking at purchasing, because there's going to be some benefits with refinancing a loan. Going into the presentation a little bit more, I mean, obviously we specialize in purchases and refinances, but there's a lot of life events that occur. I encounter with numerous customers. So I just wanted to kind of touch on some options that we have that will be going on during different people's events of life. I would say the most common scenario that I see is when we have options when a family wants to help a child purchase a home. So parents are able to help children do this. So the most common one, becoming a non-occupying co-borrower. So for example, let's say you have a child that is recently in the workforce, or maybe they just graduated college. They don't have sufficient income, or they don't have sufficient credit to qualify for the loan. This is where a family member can be a non-occupying co-borrower for someone. This person is going to have to qualify for the loan. We're going to, run their credit, get their income. They're going to share ownership. They're going to be on the mortgage and on the deed to the house, but they can co-sign for their daughter or son to help them, establish credit or get into a home. So once the loan is basically, completed, once the child then establishes a credit score and has sufficient income to qualify for a loan on their own, whether it be 6 months or a year down the road, they can then look at refinancing to get their parent off of the loan. So we can always have non-occupying co-borrowers that are a parent for helping a child. There's also an option where family can help a child actually purchase a home. So let's say, the child can't be on the mortgage for, whatever reason, that maybe they don't have any credit, or maybe they have insufficient income that can't qualify them for a loan. A parent is also able to actually purchase a home for their child, as long as their child is going to be occupying the property as their primary residence. The child doesn't have to go on the loan with them. The mortgage is simply in the parent's name. And then as far as the title work goes, the deed can be just in the parent's name and or with the child. And then moving on to gift funds. This is really common. I see this probably, every month we're able to use gift funds. So if you have a child that is purchasing a home and they don't have the funds for the down payment, or maybe they're getting married and you're going to give them wedding money that's going to be a gift, and they want to use that for a home purchase, we do allow a gift fund. So basically, we are going to require that the donor, which is the parent that's gifting the money, they're allowed to give them a form of payment, whether it's a check or wiring the money to the title company. So we're going to want a signed gift letter. The gift letter is basically going to state that there's no repayment of the gift. And then we're going to want to source where those funds are coming from for the down payment. And then we can use that amount of money for the gift for the full down payment. And that could be the source of the buyer's funds for closing. So this is really common with purchasing homes for children and gift funds. Moving into divorce. So I always tell people, so a divorce decree does not change the status of the mortgage. If both spouses are on the loan, they're going to be responsible for the mortgage payment until the house is sold. So It's really important that, divorce attorneys that are helping their clients, that you let your clients know that once, if the divorce states that one of the spouses has to refinance a mortgage in X amount of time, let's say they do the quitclaim deed and the spouse is off, it's really important that the other individual knows that whoever is responsible or being rewarded the house from the divorce, that they're making obviously their payments on time. Because if they're not, and the other party, simply thinks, hey, I'm not, this isn't my house anymore, I'm not responsible for the payment. If that individual misses a payment, it is going to affect the other person's credit score. So even though technically they're not liable for the payment, it's going on their credit if a payment is missed. Usually the options with divorce, typically that I see and encounter a lot, one of the spouses is going to stay in the house and buy out the other party's interest. So this is generally the most common scenario that I see with this. In our terms, we consider this what's called a net equity buyout. So basically, the spouse is going to buy out their interest. So we're going to be able to lend them 95% of what their home is valued at. And basically what would happen is we would be paying out the other interest through the loan. So the divorce decree is going to state that, the ex is going to get X 50,000 or whatever the amount is. Whatever the amount is that they're receiving, we are going to pay them through the loan. So we're going to list that individual on the settlement statement. We're going to give them either a check, or we're going to give the attorneys a check, or we're going to wire the money to them to receive those funds to sign over their interest to the other. At that point, once the loan is done, that's when the deed is going to be prepared. That's going to remove that individual from the title. And then that spouse will then have the house just in their name. So with this option, that spouse has to qualify for the loan. We're going to require an appraisal to be done, but they'll be able to be removed from the title once that takes place. And then typically once that spouse receives the cash buyout, we're here to help them if they need to purchase another home. So they receive the money from the equity and then they're going to hopefully want to purchase a home, and we're here to help with that. They're going to also have to qualify for the mortgage themselves. And then finally, if the spouses agree to sell the house and split the proceeds, those individuals, once they get the money, they're going to need to purchase another property as well. So we're here to help with that. I do want to touch here on this slide because I do have attorneys that will call me when they have clients that are up against divorce, where they're trying to see, will my client be able to qualify for a loan based on this amount of money for alimony or child support? So when it comes to alimony and child support income, as far as qualifying for a loan, that income is going to have to be received for a minimum of 6 months. So we're going to want 6 months receipt of alimony or child support. And then we're also going to need to document that that income is going to continue for 3 years. So this is kind of key. If you have a homemaker that maybe wasn't working, now they're, planning on getting alimony, they're not going to be able to purchase a house, right away. They're going to have received that income for 6 months before they're going to be able to qualify for a loan. So I would say, keep that in mind. Another thing that I get questioned on too. So if a divorce is completed and you have your divorce paperwork and that individual has X amount of months or a year to refinance, to remove the other borrower from the loan, if that other borrower wants to apply for a loan, but let's say their spouse hasn't yet, proceeded with that, and he or she is still on that mortgage, if we have the divorce decree that states the other person was responsible for the loan, we don't have to count that debt against that person's qualifying ratios, even though it's reporting on the credit report. So they're excluded from that mortgage being counted. Moving into helping older families that are aging in place, this again is kind of similar with helping a child purchase a home. So a child can actually purchase a home for their elderly family member if they wish. So I have a client right now, her mom lived with her, and she wants to purchase a home. The mom is on a fixed income. She doesn't have sufficient income to qualify for the loan. So the daughter is purchasing the house for the mother. So this is allowed. This is a primary residence transaction. She's allowed to put down, as little as 5% to get her into the house. So she's going to be purchasing the house for the mom to occupy. If the mom wishes to go on the loan, she can. It's not necessary. And then both of them can be on the title together, or the daughter could just be on the loan by themselves. So this is a good option for someone who's trying to help, an elderly family member. And then we also have some options when it comes to doing, like if you have, for example, a family member that wants to move in with you. Let's say you need to do an addition to the property, or we need to do an in-law suite, or we need to just make the house bigger if you're going to have family move in. We do have options where we can look at doing a cash out transaction, or a full renovation loan where we can do additions to a house, or get a house ready if you're going to have your parents move in with you, or maybe your parents want to stay in their house. They don't want to move out, but they need to make some additions. So we have options to help them age in place as well. Moving into inheritance. So mortgages, there's going to be a couple different factors when it comes to inheriting a property. The major question is the estate going to pay off the mortgage? Do the heirs want to sell the house, or are they going to be buying out interest? So I generally tell people, if the estate is paying off a mortgage, and then that individual then is going to be taking ownership of the house. If that house is free and clear, and the individual wants to sell it, they're obviously able to do so because now they're the owners on the house, and they can sell it. But if that individual is going to stay in the house, if they want to tap into the equity of the house, so there's no mortgage, if they want to pull out cash to do renovations, or just do a cash out transaction, they can pull out money and look at doing a refi on that house. What's really nice about this scenario is typically when you're doing a cash out transaction, you generally have to be on title for 6 months before you can tap into the equity. If you inherit a property that is waived, you can pull out the cash, the day after you own the house. So that's nice. If you have a scenario where someone inherits a house, and let's say the estate didn't pay off the mortgage, and now there's a mortgage that's kind of being still on the property. Once the person is on the deed to that house, they then can also pay off that mortgage if they wish to. So if whoever passed still had a mortgage that didn't get paid off, once the person that inherited that home, they're able to pay that mortgage off then. If when you have someone that's trying to buy out other people's interest, we have options where we can also do it similar to like the divorce. We just do like a net equity buyout. So there's maybe 3 individuals that are going to be awarded the house. If there's no mortgage, those 3 individuals are going to figure out the amount that they have to pay each other to lose their interest in the property. We're going to pay those individuals off at closing as well. So we'll pay them on the settlement statement, their interest of the property. Once the loan is closed, we'll then do the deed where we're going to remove the other people from the title of the house, and then the house would be just awarded to the last individual that is keeping the house. So those are some different options when it comes to inheriting a home. A lot of times too, there's one other thing. If there's a mortgage that is on the property that's being inherited, in some scenarios, that person may be able to assume that mortgage, but a lot of times they might have to go back to their existing lender to do so. But there are some options where they can actually assume the mortgage versus actually just paying it off. And then moving into retirement funding, we do have options for people if they're looking at doing a reverse mortgage. This is where we can provide funds for retirement for seniors that are living in a primary residence. typically you have to be 60 years of age to tap into the equity to do a reverse mortgage. These are going to be allowed on both purchase transactions and refinances, but you generally have to be 60 years of age. So people are doing reverse mortgages all the time to, pull out the equity that they have. Maybe they need it to live on, or maybe they simply want to invest that money. A lot of the options that CrossCountry has as a whole, aside from your standard purchases and refis, there's just different events that occur daily that I just want everyone on the call to just be familiar with, or when you're dealing with clients and our friends that can come up in just daily life where we are able to help. CrossCountry is definitely going to be an extremely, I feel, competitive lender. We have extremely low interest rates. And then with the savings that we offer, there's the no cost loan. We do also offer priority processing, underwriting. I do feel that, working with me on your loans, you're going to have definitely a more personable experience. I mean, I basically will be the main point of contact with you, your clients, throughout this entire process. So from when someone calls with a question, when they're starting their loan application, when they're closing their mortgage, that all is going to be done with me. That's personal. A lot of companies nowadays, everything is just all done online. You can talk to, several different people throughout the process, but this is going to just be one-on-one with me. As far as getting applications signed, we can do that still in person. We have options of doing electronic signatures if people are busy and they want to do e-signing. So I definitely feel that we do have a lot of options for customers that are available for you guys. So I just, I want everyone to keep that in mind, when you're talking with your friends, family, and clients. So is there any questions that we have possibly?
Question that a couple. First is in terms of the real estate market situation here in Northeast Ohio. We hear a lot about that there's a shortage of homes for sale, properties for sale. Can you talk a little bit about kind of the current climate and what you're seeing?
I mean, it's definitely a seller's market. I think it's starting to calm down a little bit, where I'm hearing that, there's more houses that are becoming available. But I mean, right now, the inventory is extremely low. I want to say that houses, people are paying above list price. That is going on daily. Houses could be listed and people are offering, well above what people are even selling homes for. So we're seeing a lot of that. With the low interest rates, I think people, are comfortable still paying maybe more than what more than what the sellers are paying for the house. So people are comfortable with that, but the inventory is definitely very low. So I always just, tell my clients, if you're serious about purchasing, just make sure you have all your financing in line, because I mean, houses are selling. I mean, agents are telling me they're getting, anywhere from 18 to 20 offers on a house within hours. I mean, it's very intense. So I always just tell people to be, very ready for everything, and just to make sure that you're ready to go to be able to submit an offer.
Another question is whether, as benefit partners with the Bar Association, is your team willing to make visits, maybe set up appointments with some of our member law firms and organizations? Would you be willing to do educational programming on site?
Yeah, I'm sure we can definitely accommodate, meeting with different law firms and just kind of going over, our benefit savings of what we have to offer for people, and then just going more in depth if anyone has any, questions regarding any of the options that we can offer. Absolutely, I don't think that would be an issue whatsoever.
Yeah, I think it's important. I think one of the best things about this partnership is the educational component and your accessibility and availability to talk to our members and to give that personal service. It's a very unique member benefit that you provide. And again, extending it to family, friends, and clients really does open up the possibilities for people. So We want to
Yes,
make sure
absolutely.
that you're busy with our members, Sheena, and that
Yes.
they understand that you offer so much more in terms of education and enlightenment. The current market changes in the market, and I think people at different points in their life experience. I know our most of our employers and most of our law firms and member organizations are doing a lot of programming for their employees, whether by Zoom or in person. And as we
Mhm.
get back to more in person, there'll be more in person. But
Right.
from health and wellness to financial education and this sort of service, I think that it's a great benefit that you provide. And we at the bar can connect any law firm or member organization with you to set those opportunities up.
Yeah, absolutely. I think that's a great idea. Well, yeah, I thank everyone for your time. And as always, if there's anything that I can do, any questions or scenarios that anyone has, I mean, please feel free to contact me. I'm here to help any way I can. And if I don't know an answer, I can quickly get one for you guys. So um, please just let me know if you guys need anything. And Dina, is there anything else that we want to add?
Thank you. No, I was just going to say the best way to contact you, Sheena, is on the phone number that's listed. We also have a dedicated website for Cleveland Metropolitan Bar Association members and your affiliates. So if you visit cmbahomeloan.com, you will find more information about the preferred mortgage savings plan, the benefit, the itemized breakdown of all the fees and what we're offering, and Sheena's contact information. So again, any questions, please reach out to Sheena. We're here to be a resource and help you. And we're just, again, thrilled to be a partner and look forward to hearing from you when you have a need.
Yes.